welcome, Jeff. Thank you very much. You just heard the comments from the National Association of Manufacturers. How big of a deal is it for markets that this phase one trade deal will get inked today?
Yeah, thanks, Dom. Good morning. Thanks for having me on bright and early today. I do think it's important. Look, this is what markets were expecting, so I don't think it's going to move markets dramatically in one direction or another. And I know we saw a little bit of a wobble yesterday as some of the details started to come out. But as has been well documented at this point, I think the markets are primed for at least a little bit of a pullback. I mean, you've got 80% of stocks in the S&P 500 trading above their 200-day moving average. You've got the put-call ratio, the lowest we've seen it in a couple of years. So whether it's a trade headline or something else, the market may wobble if it doesn't get exactly what it wants. But I think as long as we have this credible de-escalation of tariffs, which we do have, then I think trade is likely to fade to the background over the next 6 months, say. I think as we work toward phase two, and I think it becomes evident that phase two is quite difficult to actually achieve, then you might start to have some additional trade volatility as we move into the second half of the year. But I think for now, it's definitely a positive.
So, Jeff, you've been part of the fast money team in the afternoons here, and that trader crew and the investment committees that go along with it. You oftentimes talk about statistical probabilities. Right now, the markets are trading in statistically rarefied air. They are very far away from their averages to the upside. Does that then mean that a pullback is definitely due? Jim Cramer even says, don't waste it. Is the pullback going to happen, and should you buy it?
Well, I think that's the key, right? Look, a pullback is always possible. So saying that, I don't think is really breaking any new ground. But yes, I think statistically the market is a little bit overbought. Look, we've gone 66 trading days without a 1% pullback. So from just that perspective, I think the market is looking to pull back. But I think people are starting to try to make the analogy between the beginning of this year and the beginning of 2018. And we're nowhere near those kind of levels. In the beginning of 2018, you had 60% of stocks in the S&P 500 at 2 standard deviations above their 200-day moving average. Today, that percentage is 18%. There are no cracks in credit right now. I think usually you start to see credit wobble before a pullback like we saw in the beginning of 18. Not happening now. If anything, spreads are continuing to tighten. So yes, a pullback is possible, but it always is, so that's not big news. But I don't think we should make the analogy between today and the beginning of 2018 for something that's really severe.